Hello and welcome, my friends, back to Bodies and Wicks. How's everybody doing today? It is me, the one, the only me. It is Ted here, having a good time. If you like the channel, if you like what I do, please hit like, hit subscribe. It boosts me up in this algorithm that YouTube has suppressed of the lower people that don't get any action, and instead gives all the action to MSNBC hardball and the other kind of weird, stupid economic thing that's going on right now. So if let's go ahead and hit those like and subscribe buttons, and please, that would be very, very awesome. So first, I wanted to talk about this crash that happened, right? So I don't know if you noticed today. I know we're all like crypto fanatics, and I'm a crypto fanatic too, and always have been. But I always think about the stock market and check out the stock market every now and then, and think about the implications about it, what it can mean for crypto moving forward. If people are doing better in stocks, are they more likely to take a risk and then put more into crypto, or are they, if they're doing less in stocks, are they more than likely to take bigger risk in crypto? Like, these are the kind of questions that this is what we had happen today, and I'll remove myself from what is happening. That way we don't have to see myself on these charts. So here we go. So this right here, this is the NASDAQ. I mean, okay, so here in context, I'm in a 5-minute chart right now. And granted, it doesn't look like that much, but for something to be just kind of like moseying along and moseying along and moseying along, and out of nowhere the bottom falls out. I mean, absolute. Oops, I didn't mean to move that. Sorry, guys. Here, let me move it twice. 3 times the charm. Okay. So, I mean, if you want to measure it in like percentages, it's only like 1%. Which, of course, with the NASDAQ, 1% really isn't too. Well, actually, it kind of is a lot, considering that how big the NASDAQ is. So if we were to, if you look at it right now, as you can see what I have on here, if you can read the bottom of it, I'm not for sure if you can or not, but it says about an hour and 15 minutes, it had dropped about 200 and there's 232. Well, there's 23.56. Let's just see here. Take a high here. Get off this dumb thing here. Okay, it was here. 7. 13, 8, get 200. That's what you say. 8. A little bit more than 200 points. So that would be the equivalent of let's say if you're on MetaTrader 4 and you made a 0.01 pip bet, that would be about equivalent of about $200. That's a pretty good chunk of change. I mean, depending on depending on what kind of a trader you are. If you're a small time trader, still learning, still trying to get the hang of things, that could have been a dream day for you. You know what I'm saying? Say, and that's just the NASDAQ. Here, let's go over to the SPX now. SPX, which is funny, because I got screwed on the SPX because I actually had a buy in this. I bought down in here. Right when this candle got down, way down in here, because the reason I bought down here was because I saw equal highs. So I knew it was going to break those, right? And then kind of looked like there was some highs over here. I couldn't really tell, but I just thought the liquidity was more above here than anything. But for some reason, I have a box labeled short. It didn't reach that box, but what it did reach, interesting. Take a really, really close look on it. Which it hit the last, and this is on the 1 hour. Last bearish order block. Dipped into the last bearish order block before it drove down. Who would have thought it would have drove down like that? I mean, most bearish order blocks I see, they'll shy away about 30-40 points sometimes. Sometimes not even that. Sometimes 5-6. It just depends on how big the momentum is going. This thing is just kind of meandering along, and all of a sudden it just boom drops out of nowhere. Out of nowhere. Okay, now let's take a look at the Dow Jones. Same thing. Same exact thing. I mean, it looks like, had a bad day, there for yesterday or a couple days ago. And 20th, it was going back up. Look, it had a little drop here. Did the other two have those kind of drops? Didn't think they did. Like, this one kind of did. Wasn't as bad as. But I'm also on the. Hold on. Also, this is a 5. Oh, this is a 5-minute. That's even worse. Bad drop on a 5-minute. This was a warning sign. This was a warning sign. This, and you don't see the divergence in either the NASDAQ or the SPX in that kind of context. Like, hold on. Let's see what we can find out here. Because you have these, I mean, you have all these equal highs, which had led me to believe, honestly, and this is why I was in SPX the entire time. Well, until until I lost $15. But the reason I was in SPX was because it had equal highs here. Boom, it would break those. Boom, it would break those. And so I thought, hey, it's just gonna keep breaking highs. But I did not see any reason for it to not break a high. I mean, but this one hit an order block, but didn't see that till the last minute. But still shouldn't have been a catalyst for dropping. Now, so I'm searching around and I'm trying to figure out what in the hell is going on, right? And unfortunately, there's not really a whole lot that you can really find out there. Let's check out the news. So, what we got today in the news. This was one of the. This was later on. All the new, all the articles I found were just a little bit later on. Let me see if I can find the early. Where there was that was in this. Oh yeah. Okay, and what time is it? At 1 Eastern. This is an hour late. Hour later, after the crash, we finally get some news about why the crash happened. And the reasoning is because it had to do with Joe Biden's plan to rate. Here it is. Joe Biden's anonymous sources report hit that detailed how President Joe Biden planned to raise taxes on wealthy, causing the major indexes. I'm sorry, I don't buy that crap one bit. I just don't. Anybody who does, I feel sorry for. They had to come up with something to cover their trails, is what they. So this and you literally can't find it anywhere. Like, look here, let's just open up something and let's just search for why oops way did the stock. Well, I already had it up. Because it was a pretty big fall. Think about it. Days ago, is it 10 days ago? Today. Oh, my bad. I should have went back to. Ah, I can't type today. There we go. At any time past day. I don't know about this ad. I don't trust it. Times. This is literally just a read of another article already published. Show you. Oh no, yeah, I already had that. Aaron's, I think. Aaron's. technology, all you can find about it. As big as this was, like this is all, like this is the only articles you can find about it. Something just doesn't seem right. Like a drop that big just doesn't seem right. It doesn't seem right at all, and especially for no news to be about it. Also, just doesn't seem right at all. I am not putting two and two together, and so okay. So I'm trying to do some technical analysis on this because evidently it wasn't a news event. It wasn't a news event. It, it was a made up news event afterwards. Sorry, I take a little drink there. Wet my whistle. All right. So, which means that this had to be planned. Had to be planned. Far out, I mean, not far out in advance, but at least far enough in advance to where people thought that they were going to get something out of this and had people's hopes, just like mine, in it, and then just ripped it away from them. And all that liquidity, all that money that people had that in those trades just completely went blank, went goodbye. And we're not going to see it. So I look at Dow, right? So I look over here. I could, yeah, in smart money lingo, you can cut through candles. It's okay. All right, so find the last up candle before the next down candle, and that next down candle is a very dramatic candle. Pretty dramatic candle. So this is a pretty good, pretty good uh um bearish bearish order block. And look, right at the top, bearish order block. It's a bearish order block. Okay, so I found a bearish order block in US 30. I found a bearish order block in the SPX. One thing I haven't really looked for yet has been in the NASDAQ. Because the NASDAQ been all over the place. Everything I've been drawing, it's been going into. Like, look at this. I just drew this. This is from a while ago. Look at this. From this one little gap that it had that it never did cover. It came down to it and covered it. So now I want to find something similar, except for this one actually. I don't think the other ones. Yeah, the other ones didn't actually get above. Well, this one did, but just a little bit. It didn't get above the US 30. Oh no, here, oh, I'm looking at NASDAQ. Wait. Okay, yeah, I'm looking at NASDAQ. Find NASDAQ. Okay, sorry. Still trying to figure out where I am. I'm looking at all three of them. All right, so what does NASDAQ have for us? Right along 50 mark, or that 0 mark, right along the 0 mark. The only thing that's right along these 0 marks are this push up into the same zone, right? And it pushes off. Again, push up in the same zone, pushes off. Push up into the same zone, pushes off. What is in this zone? What did I draw from this zone? The fair value gap that never got filled. It got filled evidently. And a 15-minute fair value gap. That. Huh. Now here's my thing. Here's my thing is that now all of these, they're all set to, since they're all set at equal highs, right? They're all set at equal highs, which means there's so much liquidity above these. You go from here to here, right? Up here, what is their liquidity? What is liquidity? Liquidity is where all the orders are. That's where every single order is, right? So, and that's the thing. And that's the thing is that everybody was thinking that since this was the support or the resistance, that there was so much resistance that it pushed it down. I'm sorry, but there is not enough people on this planet. I mean, of course, that has to be happen, but if a retail trader like you or me, you know, a lot of us got together and you know we put uh, a sell limit on NASDAQ at that point. It's not even gonna nudge it. It's not gonna nudge it. It depends on how much money we have, right? So it's barely gonna nudge it. So even if we got like 35,000 people together, each of those people probably had maybe $1,000 or $2,000, just to put in this game that they're doing. It may have fell probably to here. It wouldn't have fell that much. So this is where the big dogs come into play. This is where smart money comes into play. This is where the people that control and manipulate the gameplay, they know. But I don't understand why well, that is true. They do let them win. Okay, so there is a mathematic equation out there. I wouldn't say equation, but there is a mathematic thing that people that do follow retail signs end up winning 30% of the time. And why 30% of the time? Well, it's because if they end up if they wouldn't let them win at all, they wouldn't keep coming back and playing. So they gotta let them win sometimes, right? Or else, you wouldn't come back and keep trying to make that money, even though you're losing it every day. So maybe this is just one of those instances where people just got lucky, you know, and people got and the people that had their sights set, and the retail people that said, "Oh, look, here's a good resistance spot. Let's just sell from here." And man, they lucked out. They just got lucky, because I went the opposite way. I went up because I saw, not here, but I saw in the SPX 5 minute. I saw that. I saw this. I saw equal highs. I saw equal highs. And then here, this right here was, that may have been a 15-minute order fair value gap. May have been the hour fair value gap. Yeah, that's what that was. So in the hour candle, you have, or in the hour chart, you had a fair value gap from here to here. So I marked that. Comes up, equal highs. I was hoping for it to come back down and touch it, right? Or I entered before it went up, because then I thought it was just going to go up the rest of the time. And instead, 5 minutes. It got close. But once it started going back up, I was waiting for it to come down, but once it started going back up, that's when I entered. So I entered somewhere around, probably somewhere, let me see. It was kind of in this jumbled mess, but not too far into it. It was probably like 41.62, something like that. I want to say it was around 41.62. So I entered a little bit late, but hey, it was still a decent entry. And you know, it had its ups and downs, and I wasn't worried. Then it got up and it got up, and then it came up, and then it came back down, and it went up. Then I'm sitting here on my lunch break, and next thing I know, like, I look at my phone, and my SPX is off my game, is literally just not even, the trade isn't even there anymore. And I was like, how the hell did that happen? And it was I had like 7 trades going on, and it was a margin trade. And because of that, it kicked me out of the trade, which was freaking ridiculous. But, well, actually, it's probably a good thing it kicked me out of the trade at the time. But either way, going back to what I was saying earlier, going back to the news didn't come out for this for another hour and a half, hour and a half, about it claiming that Joe Biden proposing a new tax on the capital gains tax caused this. It caused it at exactly this time, on how many? 3 different indices at the exact same time? You're telling me that a news event triggered this at the exact same time? And the news about it didn't even come out. It didn't even come out for another hour. So who heard about it? Who was the one that knew about this before the rest of us? And how do they know about it? Which is why I'm calling bull crap. I don't think this was a Joe Biden thing. I don't think this was anything to do with Joe Biden saying he's gonna raise capital gains tax and then all of a sudden the stock market fell. No, this was planned. This was planned by the guys with the big money and the big suits, sitting in their big chairs and their big computers and their big bottles of scotch. They all knew what was going to happen. They all played it together. And they said, I mean, again, I truly believe this, and I'll believe it down to the last moment I die, that everything in the market is an algorithm. 100% algorithm. I mean, there's nothing that in this market that doesn't happen that is not in the algorithm. So, therefore, like I said, I already showed you the parts that I already thought were part of the algorithm in the US 30 and the Dow Jones, which was the bearish order block, which came from right here, right? So that's your last up candle before your big down candle, right? That last up candle, that's your order block. Right? What did it do? It came up here, smacked right onto it, and then dropped. Even though it had been up and down through it before, it doesn't matter. It can still cut through candles. Smacked it and it boom, and straight down. All right, and then SPX, same thing. Look, I even have the box drawn out for it. Get rid of that. So I have this little box here that's drawn out. Rid of this here too. So this was a high. Trying to figure out if I'm sorry, I'm trying to figure out if it's a mitigation candle or if it is a breaker. I don't think it's a breaker. Because a breaker is a high, low, and then higher high. Well, yeah, I guess that would be considered a breaker. But your breaker is usually up at the top. It could have just been the fair value gap. Could have just been this. Seriously. It's just the fair value gap. Get touched all the time, especially if price doesn't rebalance. Price doesn't rebalance and there is a fair value gap there. Price is more than likely to come up, touch the fair value gap, and turn right back around. And really no rebalancing of that fair value gap at all. So comes up, touches the fair value gap, boom, crashes. So there's three smart money theories as to why, 3 smart money theory algorithms as to why it would have hit. So the people that sit in their fat chairs, smoking their cigars, drinking their scotch, they know the algorithm. They know it by heart. I've been studying it as well. But this just like blew my mind that all 3 of them could do it at once, and finding a part of an algorithm in each one of them just kind of proves my point just a little bit more, that it wasn't just some kind of random whatever it was that just crashed the stock markets at the very, well, midday, I guess you could say. Midday, never recovered, never tried to recover. It just kind of stalled and didn't do anything. Now you would think with a drop like that, what people will be doing would be buying, because they would be getting it at a fairly discount price, because it was a lot cheaper than what it was previously. I mean, that's just the way things work. Think about it. If that's why I have the Fibonacci's here. If you have here, if you have this and it drops all the way down to less than 100%, heck, if you'd have bought here, you'd actually made more money than if you would have bought at the regular 100. And or 30, same thing. It did the same thing. It dropped below the 100 and made more money on that one. I think SPX is the only one that didn't drop below. I could be lying though. Oh, come on. I don't have the, you know what? I don't have fib on this. So give me 1 second. Let me put a fib on it. If you like it, then you should have put a fib on it. Like it, then you should have put a fib on it. Okay. So we have the fib now. Oh, wow, this one literally touches it to a T. I don't like that. I don't like that at all. Because now you have 2 areas of, well, actually, and then you have another area below here. So you have an area of 1, 2, and almost a third touch. So you have an area of low liquidity. Then you have another area of low liquidity. So what I mean by low liquidity is, again, by where people's orders are, where they're going to put their buy limits at, where they're going to put their sell stops at, things like that. That way, when price gets close to that order and enters the market, flooded with liquidity. So flooded with liquidity. Now that the area is there, the market is good, but the money is out in the open. It's up for anybody's grab. Depends on how well either maintained or manipulated, or I would say in somebody as a, you know, if you're a newcomer, if you're a new trader, uh, maintain your trade. Make sure that you're getting something out of it, even if it's just a little bit. Doesn't matter. Just keep practicing until you can get better and better and better. And this not financial advice. I am not advising anybody to go out and spend their money, go do anything like that with it. I'm just saying that if you are going to eventually try to play with live funds, be very, very careful and know what you're doing before you get into it. I did live funds 6 months before I decided not to. And deciding not to was the best decision I ever made, because I was losing way more money than I was making any money. So what I did is I just started investing it instead. And so that way, by the time the end of the year came, or whenever it was that came, hopefully have enough saved, broker account for my stocks. That way I could transfer it over the CFD account and start trading CFD. That was my plan. So, okay, so now on to the third part. I've been rambling a lot. But now on to the third part. So what does this mean for crypto? Is the question. So if the theory of Biden is true, that crypto, or there, that this capital gains tax, right? Capital gains tax. So let me go back over here to the news. Hold on 1 second. All right. Oh man, I never took it off the news. I didn't even realize that. You guys, that's so my bad. I had it on the other screen for like ever, and I didn't even realize I took it off. Didn't even take it off the news. Now I feel like I had like charts all drawn up. Nothing. All right. Anyways, if this capital gains tax is true, let's check out what this thing entails, right? So it says here, Dow Jones Industrial Average fell, okay, and NASDAQ tumbled. Is credit reporting agent FX plus shares 14.94% after beating earnings estimate, according to a source. Report Biden administration will propose to increase a tax rate for his richest Americans to 39.6% from 39.6%, 37%, while raising the high capital gains tax on people who earn more than 1 million to 39.6 from 20. Wow, that's quite a hike. Higher capital gains taxes lower the after-tax return on, thereby making them less appealing investment. Unfortunately, history shows changes in capital gains taxes have minimal correlation to, I don't know if I'd agree with that, but what? Have to, other forces like changes in the economy, interest rates are always still a higher tax on, isn't a positive investors encouraged to hear. Stocks posted stocks posted moderate loss by that time. Report hit the taper on PM. What report? Hold on, let me see if I can find this report. I think it just leads to here. O'clock in the morning, 30 minutes after. Changing on Thursday, following a stronger than expected. Yeah, so there was a job loss claims report that did come out today. I don't know if you noticed that or not. So if we go to forex.com or Forex Factory, G4X, but just forex.com. Some things did happen in the unemployment claims. Here we go. Here was the thing. We had our last unemployment claims were 586K, right? And so we were expecting about 607K job loss. And we ended up with about 547K. So actually wasn't that bad, considering a lot of states are opening up. That I wouldn't be surprised that a lot more people back to work. So why? Yeah, just so more people back to work. Could equal higher potential 401ks. Could lead to potential higher came up. Try reading this or that. I guess an agency tax. Ooh, there's Rose. Bring to an anonymous. Sorry, that's what they love to use. Higher capital gain stocks, healing and investment. Personally, has changed. Well, I before activity, interest rates are still a higher tax on positive than new stocks are poised, or sorry, posting losses. And of course, we're flat at times until Before it hit the tape around one. What tape? That's what I don't get. What tape around one piece? Before it hit the, because that's when it happened. It happened at one. So what tape was talking about? Saying the intraday low from high. Importantly, stocks were traction for the tax. Not even better than expected. Job loss provided. There were pandemic low, 54,000 week. It was less than 600,000 in 3. Improvement in last 6. The opening of trillions if stimulus provided with cash. And good positive read on solid thus far could provide tailwind. Keep in mind though that stock prices are quite elevated. Suggested that the upside is already priced in. Keep watching recovery. Nothing about crypto, right? Futures are modestly negative or negative to flat. Job loss, gas, and pandemic. Here are some notable stock moves. Teradata. Again now. For its first quarter. March. Guiding. Pretty higher than 12 cents. Huh. Heck with profit. $34. This is my time. All Biden tax taxing investment. Buyer is helping of taxes. Billionaires fines. Top swap. Station order. Credits. Station. Stocks tumble. Taxing. Copy. by an administration with a new tax plan. Among the earning more than 1 million. Okay. Really not a whole lot of people. Actively raising the capital. Maybe that's why they did. Why the rich people did it. Maybe. Crap. They are a bit. President unveiled American Family Plan. His details are made work in progress. Days of announcement. Traders are half. Head of the virtual Britain has also 30 pretty big tens a day. Decade. My question is, why isn't China trying to reduce their emissions? They haven't signed. I mean, they haven't signed on any. Their trade deal is off for another 10 years. Why is it every other country has to do something except for China? This is one thing they don't tell you about. They omit some facts here. Government around the world kickstart their recoveries as well as their climate goals. Green spending has one avenue. Strategist global continue. say that shares in Orsted, Danish Heister shares Google jumped 6.7%. United States shares of solar shares of trading. By the way, stay the hell away from anything that says I share. Anything that says I share, you should never, ever, ever get into. That is owned by BlackRock, which is owned by the Chinese companies, which they can merely dip into your funds at any time without you knowing and take some of it. I do not advise anybody to get into any iShares. Keep going. Clean Energy Exchange Rate traded fund at 5.6 billion in assets. That didn't really tell us much either. I think this is a little bit 9% deposit fill. Cap Russell. Doesn't say they all exactly 0.9%. Doesn't happen. Find me another day in history. All three indices